U.S. labor market. Cheering, but it is too early to break out the champagne. By Bill Mitchell. On June 5th, 2020, the U.S. Bureau of Labor Statistics, BLS, released their latest labor market data, Employment Situation Summary, May 2020, which shows that the U.S. labor market has responded to the relaxation of lockdown controls in a modest way. I cannot believe that, in Donald Trump's words, the U.S. is largely through the pandemic, and it remains to be seen whether lockdown rules will have to be reintroduced when the infections rise again. But, for the time being, the payroll numbers improved as you would expect when shops reopened and people went back to work. But I stress, this was a modest improvement. The numbers filing for unemployment insurance continue to rise and now top 43.2 million since March 7th, 2020. A further 1.9 million filed in the week ending May 30th, 2020. There were also some discrepancies noted by the Bureau of Labor Statistics in these survey responses this month, which adds to the uncertainty. Overall, the U.S. labor market is in crisis, and it remains to be seen how many jobs have disappeared and how many will emerge once the lockdowns are ended. Some 2.6 points of unemployment lie outside the labor force, workers giving up looking, and as employment growth increases, those workers will come back into the recorded labor force and be classified as unemployed, rather than not in the labor force. So how deep this catastrophe is remains a bit uncertain. But I do not see appropriate policy responses in place. The U.S. government should have guaranteed all incomes and introduced large-scale job creation programs and a job guarantee as an ongoing safety net. Overview for May 2020. Payroll employment rose by 2,509,000. Total labor force survey employment rose by 3,839,000 net, 2.9%. The seasonally adjusted labor force rose by 1,746,000, 1.12%. Official unemployment fell by 2,093,000 to 20,985,000, but see below for commentary on latest data. The official unemployment rate fell by 1.4 points to 13.3%. The participation rate rose by 0.6 points to 60.8%. Adjusting the unemployment rate for the change in hidden unemployment would generate an unemployment rate of 15.9% rather than 13.3%. The broad labor underutilization measure, U6, fell by 1.6 points to 21.2%, in part because of a fall in the number and the part-time for economic reasons cohort, the U.S. indicator of underemployment, and a fall in other marginal categories. For those who are confused about the difference between the payroll establishment data and the household survey data, you should read this blog post, U.S. labor market is in a deplorable state, where I explain the differences in detail. Bureau of Labor Statistics explanation. The Bureau of Labor Statistics provided a special note to help us understand the results this month. We learn 1. The payroll survey response was slightly lower than collection rates prior to the pandemic. 2. The household survey response rate at 67% was about 15 percentage points lower than in months prior to the pandemic. 3. Both results reduced the accuracy of the surveys. 4. In the payroll survey, quote, workers who are paid by their employer for all or any part of the pay period including the 12th of the month are counted as employed, even if they were not actually at their jobs. Workers who are temporarily or permanently absent from their jobs and are not being paid are not counted as employed, even if they are continuing to receive benefits. Number 5. In the labor force survey, quote, workers who indicate they were not working during the entire survey reference week and expect to be recalled to their jobs should be classified as unemployed on temporary layoff. In May, a large number of persons were classified as unemployed on temporary layoff. However, there was also a large number of workers who were classified as employed but absent from work. End quote. The Bureau of Labor Statistics wanted the latter group classified as unemployed for consistency, but the survey staff didn't always comply, which means that the employment estimates are probably overstated. What impact might this have had? The Bureau of Labor Statistics says, quote, if the workers who were recorded as employed but absent from work due to other reasons, over and above the number absent for other reasons in a typical May, had been classified as unemployed on temporary layoff, the overall unemployment rate would have been about 3 percentage points higher than reported on a not seasonally adjusted basis. End quote. So, we are still operating in an environment of uncertainty. It is far too early to conclude that the U.S. labor market is bouncing back quickly. Once these classification issues are resolved, the participation response becomes more normal, workers coming back into the labor force, and the number of jobs lost forever becomes apparent. The true residual impact of the pandemic on the U.S. labor market will become clearer. Payroll employment trends. The Bureau of Labor Statistics noted that, quote, total non-farm payroll employment increased by 2.5 million in May, reflecting a limited resumption of economic activity that had been curtailed due to the coronavirus pandemic and efforts to contain it. Employment fell by 1.4 million and 20.7 million respectively in March and April. Despite the over-the-month increase, non-farm employment in May was 13% below its February level. Large employment increases occurred in May in leisure and hospitality, construction, education and health services, and retail trade. Government employment continued to decline sharply. End quote. A question that you should ask: why is government employment declining sharply in a major economic disaster? The first graph shows the monthly change in payroll employment in thousands, expressed as a 3-month moving average to take out the monthly noise. The gray lines are the annual averages. The data is now off the chart, and that says enough. The next graph shows the same data in a different way. In this case, the graph shows the average net monthly change in payroll employment actual for the calendar years from 1940 to 2020. The 2020 average is for the months to date. I usually only show this graph from 2005, but because history is being created at present, I included the full sample available from 1940. The final average for 2019 was 178,000. The average so far for 2020 is negative 3,817,000. In a way, graphs like this lose definition and only present a binary world. Labor force survey. Employment growth shows modest comeback. The data for May shows some improvement along the lines revealed by the payroll data. 1. Employment as measured by the household survey fell by 3,839,000 net, 2.9%. 2. The labor force rose by 1,746, negative 1.1%. 3. The participation rate fell by 0.6 points. 4. As a result, in accounting terms, total measured unemployment fell by 2,093,000 and the unemployment rate fell by 1.4 points to 13.3%. So, some improvement. But remember, last month, employment fell by 22.4 million, so the 3.8 million improvement this month is indeed modest, but a good sign if we ignore the risk of people going back to work with the virus still raging. It will take some time to absorb those workers back into employment once the economy starts moving again, because a number of employers will have been wiped out by the scale of the contraction. The following graph shows the monthly employment growth since 2008, which shows the massive disruption the sickness has caused. The employment population ratio is a good measure of the strength of the labor market because the movements are relative and unambiguous, because the denominator population is not particularly sensitive to the cycle, unlike the labor force. The following graph shows the U.S. employment population from January. While the ratio fluctuates a little, the April 2020 ratio fell by 8.7 points to 51.3%, which is the largest monthly fall since the sample began in January 1948. In May 2020, it rose by 1.5 points to 52.8%, but still, just over a half of the working age population in the U.S. is working now. As a matter of history, the following graph shows employment indexes for the U.S. from U.S. Bureau of Labor Statistics data for the 5 NBER recessions since the mid-1970s and the current 2020 COVID crisis. They are indexed at the employment peak in each case, and we trace the data out for each episode until 1 month before the next peak. So you get an idea of 1. The amplitude, depth of each cycle in employment terms. 2. The length of the cycle in months from peak, trough, peak. The early 1980s recession was in 2 parts, a short downturn in 1981, which was followed by a second major downturn 12 months later in July 1982, which then endured. Other facts. Number 1. Return to peak for the global financial crisis was after 78 months. Number 2. The previous recessions have returned to the 100 index value after around 30 to 34 months. Number 3. Even at the end of the global financial crisis cycle, 146 months, total employment in the U.S. has still only risen by 8.3% since December 2007, which is a very moderate growth path, as is shown in the graph. The current collapse is something else. Unemployment and underutilization trends. The Bureau of Labor Statistics report that, quote, the unemployment rate declined by 1.4 percentage points to 13.3% in May, and the number of unemployed persons fell by 2.4 million to 21 million. Reflecting the effects of the coronavirus pandemic and efforts to contain it, the unemployment rate and the number of unemployed persons are up by 9.8 percentage points and 15.2 million respectively since February. End quote. The modest return to employment saw the official unemployment rate decline slightly in May 2020. The first graph shows the official unemployment rate since January 1950. The official unemployment rate is a narrow measure of labor wastage, which means that a strict comparison with the 1960s, for example, in terms of how tight the labor market, has to take into account broader measures of labor underutilization. The next graph shows the Bureau of Labor Statistics measure U6, which is defined as, quote, total unemployed plus all marginally attached workers plus total employed part-time for economic reasons as a percent of all civilian labor force plus all marginally attached workers, end quote. It is thus the broadest quantitative measure of labor underutilization that the BLS, the Bureau of Labor Statistics, publish. In December 2006, before the effects of the slowdown started to impact upon the labor market, the measure was estimated to be 7.9%. In May 2020, the U6 measure decreased by 1.6% points to 21.2%. What drove this slight improvement? This was driven in part by a slight fall, 254,000, in the category part-time for economic reasons, a measure of underemployment in the U.S. data context. But this was offset by a small return to those wanting to work but not actively looking, who are excluded from the official unemployment count. The Bureau of Labor Statistics say that, quote, the number of persons employed part-time for economic reasons at 10.6 million changed little in May, but it is up by 6.3 million since February. These individuals who would have preferred full-time employment were working part-time because their hours had been reduced or they were unable to find full-time jobs. This group includes persons who usually work full-time and persons who usually work part-time. The number of persons not in the labor force who currently want a job at 9 million declined by 954,000 in May, after increasing by 4.4 million in April. These individuals were not counted as unemployed because they were not actively looking for work during the last 4 weeks or were unavailable to take a job. Persons marginally attached to the labor force, a subset of persons not in the labor force who currently want a job, numbered 2.4 million in May, little different from the prior month. These individuals were not in the labor force, wanted and were available for work, and had looked for a job sometime in the prior 12 months, but had not looked for work in the 4 weeks preceding the survey. Discouraged workers, a subset of the marginally attached who believed that no jobs were available for them, numbered 662,000 in May, also little change from the previous month. End quote. So not only are there massive layoffs occurring, but firms are also making hours adjustment, cutting full-time hours back to part-time or cutting part-time hours, and workers are dropping out of the official labor force, not searching, and are thus moving into hidden unemployment. See below. The next graph shows the evolution of unemployment rates for 3 cohorts based on educational attainment. A. Those with less than high school completion. B. High school graduates. And C. University graduates. As usual, when there is a crisis, the least educated suffer disproportionately. In the U.S. context, especially in the current time, the trends in unemployment by ethnicity are interesting. 2 questions arise. 1. How have the Black and African American and white unemployment rate fared in the post-global financial crisis period? And 2. How has the relationship between the Black and African American unemployment rate and the white unemployment rate changed since the global financial crisis? Summary. Number 1. All the series move together as economic activity cycles. The data also moves around a lot on a monthly basis. 2. The Black and African American unemployment rate was 6.7% in March 2020, rose to 16.7% in April, and rose again to 16.8% in May 2020. Number 3. The Hispanic or Latino unemployment rate was 6% in March 2020, rose to 18.9% in April, and fell to 17.6% in May 2020. Number 4. The white unemployment rate was 4% in March 2020, rose to 14.2% in April, and fell to 12.4% in May 2020. The next graph shows the Black and African American unemployment rate to white unemployment rate ratio from January 2018, index equals 100, when the white unemployment rate was at 3.5% and the black or African American rate was at 7.5%. This graph allows us to see whether the relative position of the two cohorts has changed since the crisis. While there is month-to-month variability, the data shows that, in fact, leading up to the pandemic, the position of black and African Americans had improved in relative terms to whites, although that the white unemployment was so low that employers were forced to take on other, less preferred workers if they wanted to maintain growth. However, it is also clear that since March 2020, the relative position of the black and African American workers has deteriorated. Aggregate participation rate rose by 0.6 points to 60.8%. This represented a modest return to participation after the 2.5 points plunged last month. The April fall in the labor force participation rate meant that the labor force contracted and workers who would have been counted among the unemployment were instead classified by the Bureau of Labor Statistics as being not in the labor force. This reduces the severity of the rise in official unemployment. So this modest rise in participation meant that the unemployment rate did not fall by as much as it would have if the participation rate had been remained at the April level. The question, though, is how much hidden unemployment remains after the April decline. The labor force is a subset of the working age population, those above 15 years old. The proportion of the working age population that constitutes the labor force is called the labor force participation rate. Thus, changes in the labor force can impact on the official unemployment rate, and, as a result, movements in the latter need to be interpreted carefully. A rising unemployment rate may not indicate a recessing economy. The labor force can expand as a result of general population growth and/or increases in the labor force participation rates. Here are the facts. Number 1. The labor force in May 2020 was 158,227,000. It would have been 168,172,000 had the participation rate been at the March 2020 level. This means that there are still 4,686,000 workers who are still outside the labor force as a result of the collapse in employment opportunities. It is safe to say they would not have been outside the labor force if employment opportunities had not collapsed. Number 4. If we assume those workers are hidden unemployed, they want to work, are willing to work, but did not actively seek work, and add them back into the official unemployment, the adjusted unemployment rate in May 2020 would be 15.9% rather than the official estimate of 13.3%. The claimant's data horror story. Still horrible, but moderating a bit. Here is the latest update. As for the week ending May 30th, 2020, from the U.S. Department of Labor's weekly data releases for the unemployment insurance claimants. The Department of Labor provides an archive of the weekly unemployment insurance claims data back to July 1st, 1967, here. The weekly data can be found in the UI Weekly Claims Report. Bringing together the archive data and the most recent release, June 4th, 2020, the following table tells the shocking story. So the figure is 43.2 million. The next graph shows the data from January 1st, 2020 to May 30th, 2020. I had previously posted the full sample, which showed how insignificant the previous deep recessions of the early 1980s, 1990s, and the global financial crisis were by comparison with the current event. But we get little information from seeing a huge vertical line dwarfing all previous observations. We know the scale, so I decided to start the sample at the beginning of 2020 to see how the claimant numbers evolve since the outset of the pandemic. This gives a good indication of the dynamics. The next map shows the cumulative sum of unemployment insurance claimants since the end of February 2020, as at May 30th, 2020, expressed as a percentage of the working age population in each state. Alaska was 19.6% and Hawaii was 22.6%. This map demonstrates where the loss of jobs is impacting most significantly. The next map shows the insured unemployment rate for the states as at May 30th, 2020. There are some spatial variations in the proportion of new claimants and those unemployed receiving insurance. I am investigating those variations in more detail and will report back if I find anything interesting. The following table presents the same data mapped in the first map for those who prefer numbers. Conclusion. The May 2020 U.S. Bureau of Labor Statistics labor market data release reveals an ongoing catastrophic labor market with some signs of improvement as the lockdown eases. I am guessing a lot of employment will have disappeared forever, and when the dust settles and we find out how many, the medium-term outlook will be rather grim. I would urge the U.S. government not to wait for that time, but to anticipate that substantial job creation policy initiatives will be required. The current position of the U.S. government has biased their stimulus spending towards the corporate sector and high-income earners. It disadvantages precarious workers and those losing jobs. The U.S. government should immediately announce an unconditional job guarantee and guarantee salaries for all workers made redundant. That is enough for today.